Joe Vitale from American Retirement Advisors here with the weekly market update. Now for stocks, the U.S. and European stocks finished this week in a positive territory, despite dropping after President commented that he could delay the U.S.-China trade deal until after 2020 elections, implying new tariffs on Chinese goods would be applied this coming Saturday. Now, the following news that he was reviving tariffs on South American steel and proposing tariffs on French imports in retaliation for recently imposed French tariffs on large U.S. technical companies. Consumer data, however, revived the stock market. For the week, the S&P rose 0.21%, the Russell 2000 added 0.59%, and the NASDAQ slipped 0.08%. Now, international and developed stocks, the EFA rose 0.38%, and the emerging markets added 0.88%. Within the U.S., energy and consumer staples were the best performing sectors, while industrials and consumer discretionary sectors lagged. Now, with fixed income, with the combination of better than expected unemployment and consumer confidence, odds of a further rate increase by the Federal Reserve improved, driving interest rates up and bond prices down following Friday's reports. For the week, the benchmark 10-year U.S. Treasury yield rose 6 basis points to 1.84, and the yield curve increased slightly. On commodities, oil prices gained 7.3% last week to $59.2 per barrel, following two positive reports. First, the U.S. crude supplies fell, reversing direction from 5 weeks of increases, and second, OPEC and its allies met and appear to be ready to cut oil production on top of their current agreement to reduce supplies. In economic data confirming the consumer remains healthy and supportive of economic expansion, our nation added 266,000 new jobs last month, and in the prior 2 months revived up to 41,000. Surprisingly strong gains across all America job categories. Unemployment rate came down to 3.5. Meanwhile, new applications for unemployment benefits, which is measured layoff, at the end of November fell to the lowest level in 7 months, ahead of expectations a return to a 50-year low. Consumer confidence, as measured by U of M, gained this month, with their index rising 2.4 points to 99.2. Particularly strong were households with income in the top third of the distribution, as their reading was the third largest in the past 20 years, buoyed by higher stock prices and declining inflation expectations. In construction, the spending decreased 0.8% in October, below 0.5% gain of the prior month, and expectations for 0.4% growth. Let's talk about company news. Bristol Myers Squibb, which is a G50 and a Core Select holding, shares rose 5.3% last week on 4 separate drug successes from their pipeline, which displayed the company's improved diversification across diseases and drugs. Now, Five Below, which is a G33 holding, reported sales and earnings that exceeded expectations, and they raised guidance for the full year. MasterCard, a G33 holding, announced that its board of directors increased its dividend by 21%. So the board also authorized a repurchase of $8 billion of its Class A common stock, representing 3% of the total shares outstanding at current values. Several holdings in our energy sector focused portfolio benefited from higher oil prices last week, with shares rising 4 to 9%. And lastly, last week, Cyber Monday generated over $9 billion in sales, up 17% from the prior year and blowing out expectations. So if you have any questions of recent market news and how it affects your portfolio, give us a call at 855-756-5700. God bless. We hope you're enjoying the blessed holiday season, and we will see you soon.